Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Is China getting sandbagged again? Or have we simply taken our eyes off China recently due to our frustration with lockdowns and then the line being taken down for upgrades? Meanwhile, our attention has been focused more on what's happening with these two new factories and their ability to ramp up, or lack of perhaps. Alright, China was in the bad books with investors, and there is an apparent risk there. There are concerns of future lockdowns and instability. In a sense, the China side of the operation has been bruised and likely lost some of its PE ratio. However, China is also the most state-of-the-art facility that Tesla has that has hit volume production. It's our leading indicator as to the success of Tesla's manufacturing. In fact, namely the Model Y factory there, as it was the most recent, and it also has the rear Gigacast mold, which, as we know, removed about 300 robots and processes and is a big deal. We just saw record production and deliveries in June already, and that was before any of these Shanghai factory upgrades. We heard that Tesla delivered in excess of 157,000 vehicles just in June. Although the production was slightly lower, it's still a fantastic result. Anyway, we are hearing through multiple inside sources familiar with the upgrade, and it would appear we might start seeing some very impressive results. This factory is going to come back with a vengeance, except we have lost half of July from the downtime. Actually, Tesla say the work on the Model Y has actually already been completed on July the 16th. These modified Model Y lines are supposedly now able to produce 2,000 units a day. That is ridiculous. But it doesn't end there, as this month apparently they might have optimized the Model Y line to reach 2,200 units a day, a further 10% increase again. Wow, then we're up to 2,200 vehicles a day just from the Model Y factory in August, and the lines were down for half of July. Just to repeat, Tesla made the line upgrades at the start of July. Once they were complete, the run rate could reach 2,000 already, then the following month it could reach 2,200. If Shanghai hit 2,200 Model Ys, then that would be the equivalent of 803,000 a year. And if we adjust for 20% downtime, then we're at 642,000 a year. Although I'm not sure I would expect quite that much downtime, provided there are no lockdowns. I think 20% downtime is definitely excessive for a factory that's been operational for so long. Besides, I'm more interested in what Tesla are capable of, rather than the actual rate adjusted for line improvements, which, well, improve the line even further. Wow, Shanghai at that higher run rate, that is amazing. 2023 will see some impressive deliveries. Oh wait, hang on, we've totally missed something. Shanghai has two factories. There's the old Model 3 factory too. Now, the Model 3 factory does feel like it's taken a bit of a backseat, which makes plenty of sense as it has to compete for components from the far more profitable Model Y. If Tesla are limited on battery cells, then it just makes good business sense to place them in the more profitable vehicle. But perhaps Tesla are no longer as limited with cells so much, as we're also told that the remodeling work of the first phase production lines, which manufacture the Model 3, kicked off on July the 17th and can be expected to be completed on August the 7th. We're hearing that upon completion, the Model 3 line might reach a rate of between 500 to 600 vehicles per shift. Tesla previously had 3 shifts that were generating a total of around 1,000 to 1,200 Model 3s a day. Now, if this new run rate is also in 3 shifts after the upgrade, then that would mean 1,500 to 1,800 Model 3s a day. The same insider sources say that Tesla Shanghai was previously on a run rate of 2,500 a day. We also have Elon saying that Tesla has achieved production of 30,000 vehicles in some weeks, not just one, and this was far back in June. And if we remove 10,000 units a week for Fremont and 2,000 from the other two factories, then that leaves 18,000 a week from Shanghai, which is about 2,500 a day. So that number does check out. Of course, some of those weeks might have been above 30,000 too. Anyway, that's not even the exciting math. We have sources saying Model Y alone could be at 2,200 a day, and then Model 3 at 1,800. That comes to 4,000 a day total. Or if that does sound too good to be true, we can scale back that Model 3 production and still hit 3,700 a day. If these numbers are correct, then that is an increase of around 1,200 additional vehicles produced a day, or an increase of 50% production. Sure, there may be some downtime, but it's relative, as we're comparing a previous run rate with a new run rate. And guess what? That previous run rate would have likely had as much downtime as the new one. So this would in effect really be a 50% increase in production just over a few months from these upgrades. Now, I have reported on similar things in China happening in the past, and it has sounded too good to be true, yet we surpassed those unbelievable run rates some time ago now. Just face it, Tesla is an unbelievable company, creating unbelievable progress. That's likely the hardest thing a lot of potential investors may struggle with. It's simply unbelievable. Thinking about this more, these upgrades seem highly underrated, particularly as Shanghai isn't far off 2/3 of Tesla's total production, and it just got a potential 50% increase. This is actually huge, a really big deal. And don't forget that we also know that due to economies of scale, that this 50% increase in production equates to a lot more than 50% increase in profits, possibly even closer to double. Double Shanghai's previous profits, not double Tesla's total profits. Although they are a little lower now due to the stronger dollar, we will need to do some real numbers on this. Anyway, back to the 2000 a day, and then the jump to 2200 a day Model Ys. So think about it like this. Tesla have just done a major line upgrade. This might possibly be an architecture upgrade, perhaps from a C architecture with A efficiency to a B architecture with C efficiency. And possibly in August, Tesla are already up to a B architecture with B efficiency. And alright, this is somewhat theoretical, but what if there was more potential for this upgrade after it has been further refined? What if Tesla can bring it to a B architecture with A efficiency by the end of the year, and then it reached perhaps 2,400 or 2,500 Model Ys a day? As exciting as this is, I mean, where does it end? 2,200 is already an absolutely exceptional rate. That's going to do wonders for the stock price once the street work it out. That's already a new Model Y coming off the line every 39 seconds. Just to remind you, Tesla claim that their aim in Berlin is a Model Y every 45 seconds, in a larger, more state-of-the-art facility that actually has an A architecture. But what is the limit of Shanghai? Or what numbers can we potentially expect? Well, where are all the cells coming from? CATL. And what have CATL recently done? Refurbished a massive cell fab that has been rumoured to produce up to 60 to 80 gigawatt hours a year capacity. With Tesla's LFP vehicles having a 60 kilowatt hour battery, and even at 60 gigawatt hour additional cells, that's enough cells for 1 million more vehicles a year. Remember, CATL were previously supplying this factory before this fab. However, they do supply Fremont now too, but either way, there is likely sufficient cell supply for all this potential new capacity for Tesla in China. China is a great base of income for Tesla, at least when it's not locked down. These numbers really are getting quite spectacular, enough to carry the rest of the company if necessary. It may even be worth working out how much profit China alone generates now. On top of that, there is still another new factory to come that could come close to double this capacity again. I don't know where this latest line upgrade will take the run rate to after fully ramped and efficient. After that, there may be another major upgrade, but in my opinion, I think there is a good chance that these rates will continue to improve. Even if only by a further 10% for the rest of the year, it's still impressive. Remember, Tesla are factoring in continual increases in line speed with their 50% growth, along with new factories being built. But there has to be line speed improvements to achieve that growth in the long run. I think they will continue to improve. On top of that, the Model 3 line likely has a reasonable amount of potential left there too. I think it's time to start getting into some numbers pretty soon. I think we can really work out a fairly accurate valuation of this company, of what it'll be worth by the end of the year, with all the numbers we've calculated and all the information we were given on this amazing earnings call. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.